Talk to me a little bit about what is the tip credit and why do people not exercise it? Why do their accountants that they are already having to do the books not even consider that?
I think it's a few things. One, I think most like kind of we'll go back to the example of April 14th at midnight, right? If you're waiting till, the midnight hour, the 25th hour, you just, as an accountant, you can't think of everything. You can't be like, your main thing is, let me get this filed, not let me get this extra stuff in. So I think that's one. I think two, it's most restaurant owners, right? You yourself, your job is to make money, right? You want to make money, you want to provide for your family, you want to help the community out. The last thing on your mind is, let me take advantage of these tip credits, right? That's the last thing. So I think it's one, not knowing. And I think two, a lot of accountants, and I hate to say this because I kind of grew up in this world, and I think a lot of it is they're not lazy, that's not the right word. They're just not going to go the extra mile.
They don't understand the different industries, I think.
It's that, and I think it's like any industry, right? Like when you have a car that breaks down, like there's not some rule that says every car is going to break down May 1st. Like it's just, like it's not going to happen. But like with accountants, everybody's looking for their guy April 15th. So it's just that long line. But about the tip credit, kind of what it is, if you're a restaurant or any industry, but we'll focus on restaurants specifically, obviously, because we're on here, is if you pay a tipped employee and you report their tips on their W-2 on their check, you actually get a tax credit at the end of the year. Now, I'm not going to go specifically what exactly a tax credit is, but just know this. It's a tax deduction. The way I'd explain it, it's a tax deduction on steroids, basically. When you spend $1, a tax deduction is like you save 10 cents. It's basically inverse. When you spend $1, you save 90 cents. So it's basically, 9 times as good. That's the way I would look at it. And yeah, if you're paying your employees, your bartenders, your waiters, your waitresses, your busboys, whoever it is, servers, and you're reporting those tips, your payroll provider should be able to provide a report to you that says, hey, your tip credit is X. And I'll give you an example. I have a restaurant client that opened, I think 4 days a week. They're open Thursday to Sunday, only for the dinner crowd. So I think from like 4 to 10 or 4 to 11. And, they make about, I'd say $1 million, $1.2 million in gross revenue, not including what it takes home. And their accountant was missing I want to say it was like a $10,000 credit, which is huge. Yeah, they were just enormous. Flat out, regardless, there were other stuff they weren't doing, but I was like, hey, are you guys doing this? I noticed you have tipped employees. They're like, I don't think so. And I did their return this year. It went from like 25,000, I think, down to like 5. And they made the same amount of money. There were some other things that we did, but just from knowing that, and I think that is just most people don't know. Most, like you said, most accountants don't specialize, and most business owners don't even know it exists.
I mean, that's amazing because quite frankly, I've been in this industry for 25 years. I'd never heard of it. I've heard of tip credits where you don't have to pay full minimum wage in certain states. And the tips have to make up at least a minimum wage, but I'd never heard of a tax credit for it. So the fact that I'm in this industry, I'd never even had any idea that was something that was applicable to our audience. So that's amazing. You talked about the research credit. Talk to me a little bit about the research credit. Brewing your own beer, making your own kombucha, making your own wine, whatever those things might be. Talk to me a little bit. What is that? And I run a software company and we take R&D credits all the time. So I'm assuming it's something similar, but talk to me a little bit about that because that's also something I am pretty certain that most of our audience is not taking advantage of.
I'm pretty sure. I shouldn't say I've never seen anybody not do it that wasn't working with me, but it's very rare. I'll say that. So it's very similar to the software company. So the IRS, years ago, they said that if you are building your own product services, you get to take advantage of a tax credit. It's been around for years. I'm pretty sure it's going to be permanent. It's not going anywhere. So if you were a restaurant, if you're making your own kombucha, if you're brewing your own beer, if you have a restaurant and you need to make a new menu, that counts. So if you're making new items, and again, it just has to be new to you. It doesn't have to be new to the world, right? Doesn't have to be new to the
beer,
world.
There's some breweries in Belgium that have been around since, whatever, 1300s.
Whatever it was.
Yeah.
So if you're brewing your own beer and let's say you pay a brewer full time to brew beer. Again, I'm simplifying the version, but if that's all his job is to test new samples, test, recurring ones, improve them, and you pay him $100,000 a year, normally your tax rate, you'd maybe save $20,000 in taxes for that. If that's his case, you'd save like $80,000 to $90,000. And the reason why I like these credits is you're not inherently changing the way you do things, right? Because, I'm sure you've been in this a long time. You have to be an S Corp, a C Corp, a partnership, all these. That requires a big change, right? You have to do a payroll. You have to, now if you're a C Corp, you can't take, there's all these rules that you have to inherently change. With the credits, you're literally not changing anything. Your accountant's going to ask you some questions, some yes, no. We have a whole process. It's a yes, no answer. And if you do, we just look at your books and then we can retroactively go back and fix it. And the nice thing is there's so many restaurant clients that are probably not taking advantage of this. If you had tipped employees in 2020, 2021, 2022, we can actually go back and get you that money back.
Yeah, that's one of the things that we actually did a little bit, even in some of the R&D credits. We went to a different CPA firm and we're able to go back and get, restated tax returns. And it was pretty amazing, on the tip credit side and on the research side. So, do you have any success stories that you would want to share with our audience that you're like, oh, we went back 2 or 3 years and ended up getting people either a fat check or a big credit towards next year's taxes?
Yeah. There's actually the one the one that's open 4 days a week. So they're out here in the Midwest. We went back and they had some tip credits. I think one was for 10. It was 10, 12, and I think 2020 was a little bit lower because, obviously people weren't working as much. I don't remember off the top of my head, but I remember I think they ended up getting back like $30,000 in checks or something. I can't remember the number exactly, but they were like, wow, we're never leaving you. And then we also helped them apply for the ERC credit. So they got back
that was really where I was going next is we got a lot in the way of ERC credits. So talk to me a little bit about, because it feels like that's one of the most untapped resources that restaurants should have used. And because it was, I can tell you that the amount of effort that we went through as a business was pretty significant because the government didn't make it easy back when we applied for it years ago. But it seems like it's both gotten easier and there's still money available. Talk to me a little bit. What is the ERC credit and, and why should restaurants consider applying for it?
The reason number one is that if you're a restaurant, you're most likely going to qualify. As long as you stayed open and kept people on payroll between 2020 or basically April of 2020 to September of 2021, so about 6 quarters, so basically a year and a half, give or take, you can get a straight refund, straight cash back to you for keeping those people on, as long as they're W-2 employees and they're not foreign, you actually get a credit. I think it's up to $26,000 per person. So I had one client, I want to say they have I think they have 30 people on payroll, and they ended up getting back $400,000 or $500,000, whatever the math came out to be. And they were so happy. And the reason I think why a lot of restaurants, like you said, it is cumbersome. It is, I'm not going to lie, it is cumbersome.
It takes a lot of work. You got to go back and get records of stuff that you don't really want to have to deal with.
Get W-2s, time logs, payroll returns, all that stuff. And the nice thing is, if you work with me, I help you do it. I'm going to tell you exactly what to get. I'm not just going to give you a list and be like, all right, go home and do homework. It's no, we're going to sit on the phone. We're going to sit on Zoom and I will hold your hand and say, give me this form. No, share your screen with me. Click here, click this. I will sit right there with you and do it, or somebody else on my team will. And then I think it's cumbersome. And I think the other one is that people are listening to TikTok videos, accountants giving just general advice. So the reason why most restaurant owners or restaurants will qualify is, number one, the first test is you had to have a drop in revenue, which some restaurants have
gone down, which I guarantee you haven't.
Most did. And then another thing too is if your business was affected or impacted, if you were shut down by a government, whether it was the city, the state, the feds, whoever, if you had to shut down, you're going to qualify. And then another one too, which a lot of people don't know, is if your logistics got interrupted. So for example, a lot of my restaurant clients, they actually had to they bought meat and stored it in a deep freezer. So they're I don't know if it's going up. There's logistic or supply chains. If your supply chain got disrupted, you would qualify. So just right there, I can't think of a restaurant that stayed open that didn't have one of those three. I can't think of one.
And obviously there's some that did better than others. We have some restaurants that, but many of them really, really struggled.
If you want even more tax tips, make sure to sign up for our email list. Link in the description. You're going to get cheat sheets, all that. And then by the end of it, you're going to say, I'm switching to these guys and I'm getting rid of my CPA.